Hello, everyone, and welcome to the Buck Stops here. I am Catherine Murray. Well, we are seeing the markets begin to digest large cap tech companies' earnings for the next 2 weeks. So let's do a bit of a deep dive in terms of where these companies currently stand, what we should expect, and again, really, what do we want to invest in for 2026? And to join us for that conversation is Joel Kulina. He's a managing director and head of trading at Wedbush Securities. Joel, always great to get your perspective, and I know it's always busy to take you away from trading during the middle of the day. So really appreciate it.
No, great to be back.
Thank you. Let's start just big picture as we start 2026. Actually, I should say 2025. There's a broadening out of the market, maybe away from tech stocks into small caps, mid caps, etc. But it feels as though the sentiment's turning a little bit back into tech, and earnings are going to be probably key determinants in terms of whether or not investors want to continue that flow of money into tech. What is that? How you're looking at it, or what are you seeing?
Yeah, no, I agree with that assessment, especially the broadening out of the market. But I think the key for tech, it's obviously been a wild, 3 or 4 month stretch here, and I think the toughest thing I hear from portfolio managers, investors, buy side, sell side traders is that the pace of news flow somehow just continues to kind of accelerate at a dizzying pace. It's almost like drinking from a fire hose nonstop, and that's been difficult, right? You see these headlines, whether it's an AI project, a commitment, if it's new, it's old, and it just seems to never stop. But the AI trade really, tech wobbled in the year end. You had, Sam Altman was really under the microscope. He had this interview back on right around Halloween with Brad Gerstner, and this is right around the time where there's a lot of concerns around open AI funding. They have 1.4 trillion in commitments. Where are they going to get this? Is this capital going to be never ending? And that was a big overhang for the space. Nvidia has pretty much been dead money for 6, 7 months now, as well as kind of mega cap tech. But the narratives have definitely shifted more constructively the past 5, 6 weeks. Number one catalyst right before Christmas, you had OpenAI headlines that they were seeking. They were, seeking or not seeking. They secured near term funding. There's $100 billion raise underway right now. So any near term, medium term concerns around Altman and OpenAI have sort of been put on the back burner. And then in 2026, you have this Anthropic and what they're doing. They had, Claude Code was launched, Claude Excel, and now Claude Bot, which is potentially the really inflection point for agentic AI. So, which the key, why these rollouts from Anthropic is so critical, in my opinion, it's reinforcing the ROI that we are seeing inflection points. And again, it's just gonna give people more confidence and higher conviction to keep spending money as the AI trade broadens out, and we're seeing real life, use cases, kind of multiply.
Hmm. Uh, so it's interesting though that you're focused on Anthropic, and it seems as though Anthropic is doing or making leaps and bounds ahead of some of the others in terms of corporate clients. Is that correct?
Correct. Yeah. Like I don't have a list of who their biggest clients are. But Anthropic has been dominating on the enterprise front. And obviously OpenAI has been doing their best to kind of try to narrow that gap, but they're just struggling to do so. But yeah, Anthropic in terms of enterprise, it's by far uh the most widely adopted platform, and with and their leadership, really there's no end in sight. It's been a little bit choppier on the consumer side. You have ChatGPT, Perplexity, Grok has gained a lot of traction as well. And it does feel like the large language models at the consumer level, they're going to be a little bit of a knife fight. There's signs of it being commoditized a little bit. We know OpenAI is reverting to kind of, make an aggressive push in advertising to kind of, generate more revenue to keep the kind of dream alive. But yeah, Anthropic, there's no even close second in terms of enterprise.
But it's interesting. So to pick up on your point about there being a return on investment ROI, I guess is that giving a bit of a floor to the concerns that people will overspend in capex? In other words, it's giving reason to continue to spend, and therefore you'd think that that would unleash some of the momentum for the chip stocks like an Nvidia.
Yeah, it's funny you mentioned Nvidia. I was just looking at the chart today. I mean, the stock is again, you can pull it out. It's literally, I think it's flat since June. It's been kind of incredible given that they're still in terms of, compute, they are still the number one horse by a mile. But I think names like NVIDIA, Broadcom's been very choppy as well, another great large cap company. They sort of have been the source of funds for this broadening out of AI. And if you're aware, look what's been going on in the memory stocks, the storage space,
Right.
optical names. the AI trade has really gone down to the level, and honestly, it's simplistic. It may sound simplistic, but it's what I'm seeing in my flows and conversations. Names like NVIDIA and Broadcom, they're just sort of easy targets for people to sell. They're very liquid. You can raise a lot of money and then rotate into other areas of the AI trade.